How's it going, guys? Welcome back to another episode of mentfx. So we just finished up a live call in our paid mentorship where we spoke a lot about the trades we took this week, the trades that other clients and community members were sending out this week that played out perfectly, how we were able to get into these trades, how we were able to properly trail and take profits or pips out of the market this week. Now, as we spoke, and we spoke for about an hour, we basically took a very important lesson out of the talk itself, because a lot of the time, some of the best ideas are bred through conversation, through questions being asked, and through questions being answered. I learned the most from teaching, and that's why I love to have this YouTube channel and all the other stuff, but we're not going to decorate it with fluff. We're going to get right into the main stuff. So something we spoke about actually would be very important for a lot of you here. And a lot of you are going to need to hear this because you are just starting, or you are intermediate, or you are even advanced when it comes to smart money concepts. Maybe you've seen all my videos and your smart money knowledge has gone through the roof and you understand everything, but there's still times, and you know this happens to you, that you just can't figure out what you're doing. You're missing that correct order block. You're missing that correct inefficiency. You're getting in and then you're getting stopped out. You don't understand what's happening. Your trades don't get you to that 1 to 10, 1 to 20 thing. And this is something I wanted to address today as we look at some of the week's trades. So in our community, I've just gone ahead and posted most of the before and after trades in here instead of going through all the talks, all the posted graphs, all the posted ideas that I put out by me through the analysis. Instead, we're going to look at some of the before and afters of what we sent out and what happened. Again, as I start going through these, you'll be able to see when they were screenshotted, when they were posted. Again, these are posted today because I wanted to be able to address them in this YouTube video easily, but these are all available here at the date of, with proper trailing. As you can see, we trailed most things, understanding where we're going to take partials way before any of it happens, sending out signals, or not signals, but markups way before they occur. And now we're going to take a quick look at it and kind of go a little bit in depth to not only increase your smart money knowledge and understanding, but also to help you see why a community, or a community of members that are trying their hard or dedicating their lives ultimately to becoming professionals in this, is one of the best things that you can surround yourself with if you're serious about learning this stuff. So as we get into it, let's take a look at some of the trades we took this week. So we took trades on NZD/USD. I've been watching it a lot this week, and we caught a lot of back-to-back perfect trades on NZD/USD, Euro Australian dollar, gold, which was actually really small. And then Owen, one of our members, actually caught one of the most beautiful RR trades, 13 RR, in just a few days. I believe it was like in 1 or 2 days. So let's take a quick look at NZD/USD just for a weekly recap for those on YouTube and for those in the private mentorship. For NZD/USD, we will take a look at this on the actual charts in 1 second, but ultimately we send this out before it happening, expecting for a buy off of this spring's test right here, heading up into this area, which acted as an distribution in the past, which we'll take a look at in a second, to then see price action come down lower. Now, what you'll notice when you look at this very quickly is that there's a lot of stuff going on here. Excuse how much stuff is in here. Just recognize what we were looking at was this distribution, right? And part of this distribution was basically this entire thing here. This box you see is ultimately this entire distribution. Now, within that distribution, okay, what we noticed was a distribution that made the test of this bigger distribution. And within that, we had a new distribution form, which was going to make the test of this distribution, which formed the test of this distribution, which formed the test of this distribution, right? So it's a little bit of a riddle, but there's a lot that goes into in terms of confluence when we take trades and look for entries, right? And with this in mind, we instantly had areas where we were expecting partial. Now, this is what this video is kind of about, and why it's going to be very important for your own institutional entries, and how you're going to get the most RR out of your trades, and how your win rate is going to ultimately skyrocket through the roof when you understand this one concept, okay? So let's jump onto the actual trade here. Excuse all the numbers. We were going on the mentorship we were just going through a step-by-step approach to how we could end up catching this trade. You don't see any of the rules here, so the numbers won't make a lot of sense. But ultimately, what had happened and what we were expecting is if we jump up to the higher time frames, excuse all the lines, do not let it confuse you too much. Let's just jump down to maybe a 30-minute. What we were expecting, as you can see here, let's ignore all this stuff as well right here. We don't need to see that. What we saw is this huge move through these highs right here, right? Again, there were highs here. We had to move through them. We had highs here, a move through them. And then we finally had this major breakdown. okay? When we had this breakdown, we recognized what about this move here. This move, as we've learned in our mentorship, as we've learned on public YouTube, as we've learned through all the concepts we've studied in the form of inefficiencies and liquidity and price movement, price came to grab the liquidity here and blew itself down, you know, taking out all these major levels of liquidity and support, whatever you want to call them, you know, trapping those retail traders and ultimately coming down to here. Now, when this occurred, we were interested in looking at this in this market basically ever since right about here, I believe. This is when I first started looking at this market. When we looked at this, we recognized a few things. One, that this acted as an upthrust after distribution of a schematic. You guys can go and study this and see it if you'd like, but generally we're not going to go, we're not going to go and look at every part of the schematic right now because that's not what this video is aimed at, but there's a schematic inside of here that you can go ahead and study if you'd like. There's a major schematic here with a buying climax. I will let you know about here, at least for me, and you can go and find those levels, those liquidity grabs, and ultimately what we were doing is we were expecting a test of this area. And at this point I was on a 15-minute and we were zoomed in on this, and if you notice, from all the videos we've looked at, all the videos you've watched, all the concepts you've learned, as we get a little bit lower, I think on the 5-minute even, there's a little area. Actually, let's get down to even the 1 minute, to be honest. Let's move over here. And okay, what you'll notice about this 1 minute is we had this major area of imbalance, right? This imbalance that happened between multiple candles, thereby forming the multi-imbalance, basically inefficient area, expecting price to, if it were to come and test this upthrust after distribution, or simply this order block that took out the liquidity that rested above these highs right here, then it would most likely reject from in or around the areas here, right? And also, if you notice this on a higher time frame, the imbalance is also right here, right? So there's two imbalances, and some people ask about this in the comments, but ultimately, imbalances on one time frame does not mean that it's invalidated on another if it's filled, right? So again, this is a 1 minute imbalance that is still that exists. On a 15-minute though, the imbalance is actually a lot smaller. It's actually within here, but that does not mean that this 1 minute imbalance does not have to get filled. Now that said, price ended up moving down, and as it began moving down, we were actually on a lower time frame looking at this unfold right here. We had our selling climax, our aromatic rally forming all these tops, had the secondary test which formed these lows, right? The move through them, creating that order block that grabbed that liquidity, that move through these, creating that order block, right? This was the mitigation of both those order blocks, hence the slow price movement. And ultimately, we were waiting for that one more spring that would take out the liquidity, resting below all these lows, resting below this low, right? And what we had is that spring down. Now, what's interesting, okay, is a lot of you won't see this as a spring, and instead you'll be like, where's the order block here? What do we look at? This is something that can confuse a lot of people, but ultimately, right, you have to consider the price in a fractal nature, as we've taught before. So if we jump up to a 4-hour or even a daily, I believe this will be an order block for you. And when you see that, it'll be very easy to tell why price did this, right? So if we go to a 4-hour very quickly, just take a look at what actually occurred here, you can now see it relatively easy, right? You had these lows, as you can see, these equal lows, right? What rests below them? Like we said, stop losses, people that are trying to sell. Here's your move down through the lows. Here's your move up. And now what are we expecting? The retest of this area to continue higher. And of everything we've learned thus far, if price is to go higher or go lower, what does it have to do? Well, it has to buy to sell or sell to buy. And to do that, it needs to meet areas of inefficiency in the market. So when it meets this area of inefficiency in the form of an order block, it's most likely going to take off, right? And where can it take off to? Another area of inefficiency in the market. And what does this area function as? Well, here are your equal highs, right? Here's the high, here's a high, here's your equal highs. Here's a move through them, and here's a move down. Now again, the order block doesn't look perfect here, but notice what happens when so let's clear all this, right? We can see this order block very easily. This one doesn't look that easy to spot, but notice what happens when we jump on a 3-hour. Very easy to spot now, right? Here's your up move through all these highs, the form of the liquidity. Here's your move down, right? And now here's your move down through that liquidity, sorry. Here's your move up, leaving this imbalance. And now you can see this price is filling this imbalance in the form of inefficiency to give us, most likely, from an institutional perspective, higher prices to which area? Above liquidity, right? AKA very, very somewhat equal highs into this order block. How do we know where into this order block it might come? Well, that is when we start to apply our idea of inefficiency. And we find out that there's actually a inefficiency inside here And 50% of it on a 5-minute is actually an inefficiency of a smaller area, and on a 15-minute, it's an inefficiency. So ultimately, if price was to give us higher prices, we could expect it to come up there. Now, what we studied and understood is that as this gave us that spring and continuation upwards, we were still not buyers in this market. Let alone, as it began to test it, we were still not buyers in this market. Notice what happened. So we're not going to talk about this too much, but let's grab it to a little bit of a lower time frame, right? Look what happened. We had our selling climax occur. We had the automatic rally form, the secondary test form, right? Creating those equal lows in the market that moved down, which function as a potential ST and B, right? These moves in or around these areas showing us that price might have wanted to go lower. We weren't sure yet, right? We had a potential spring form, and we had this move take off to the top side. Now at this point, we were actually, okay, so now we actually did come and take out, as you can see, these equal lows right here as well, okay? So we cleared out the liquidity here, and we were still not buyers in this market. We still hadn't sent this trade out. As you can see, the trade was here, but we are still expecting for this price to make a run for these areas here. And as you saw on the higher time frames, all this movement is the mitigation of all the imbalance on the higher time frame in this area, right? So it's all just mitigating, giving us those Wyckoff-ian accumulations, but we're still not interested in being buyers. Now at this point, after we formed a spring, we expected that price would most likely hold above this. And if it was to, right, we wanted to see a potential re-entry within these areas. So as we got lower on time frames, we began to watch inside of here. And as you'll see, you saw this unfold again. The buying climax into an automatic rally, into a secondary test, into an upthrust, right? Into a spring, right? And the spring acted as a test, if you want to think about it, of this spring. So that spring acted as a test. So now we needed a test of this spring now, right? And as we were expecting that, let's get even lower, right? So we had this reaccumulation in here occur, right? So in essence, think about what we have here. We have a higher time frame distribution right here that we are expecting to be met as a test. Now on a lower time frame, we have a lower time frame accumulation. Within this accumulation, to the test of it, we have an even lower time frame accumulation. And within this accumulation, on a lower time frame, we have this accumulation, which is testing this one, and now we still have not entered this market. Instead, we waited. At this point, we were ready to enter on the spring. However, why did we have a second entry? So we were expecting to enter here for a test, and as you can see, we got the perfect test, I believe, right about now. So price moved around here, giving us a buying climax, automatic rally, that ST equal highs, that moved through more equal highs, right? So we liked this a lot, and we wanted to see that taken out, right? We had the price kind of break down a little bit here. There we go. We got that perfect entry right there, forming that ST and B or spring of this schematic within that schematic, right? And we started to move away. Now, as we did this, we haven't done anything to our position yet. We held this position, recognizing that we wanted the partial when we first got above here, or not partial, but break even above there. So what happened is price started to break down, creating equal lows again. That counts another ST and B. And now notice what happened. We had another spring, right, that came into this area. And what did that spring do? Well, this spring acted as the actual test of this spring, which was the test of this spring. So you can now start to see how fractally this market develops as we were looking to get into this trade, and why you don't have to worry so much about missing a trade, because there are always going to be areas of reaccumulation, of new trades in the market being facilitated between the composite man and everybody else, and there's going to be opportunities to enter at any point. So we had the spring occur again, this move away occur, and we sent out this trade right here. And as the price moved away, price made its way back into here, and we were able to get re-entries on this at this test, right? And then we got the move up. Now, at this point, this is the important part I want you to, a lot of you to consider. Why did I send out partials at this area here? Despite the fact that we expected price to come into these areas up here, giving us a 1 to 8, a 1 to 9, right? And then later we had a really nice little setup here, but we don't need to think about that because we didn't send it out. So we're not going to look at that right now. But why was I looking to take partials here even though I was targeting these areas? Because smart money trading does not mean you're here to make huge RR. It can, and it will, and you will get huge RR trades. But here's what everybody forgets when it comes to smart money, and this is one of the most important things that we covered in our webinar. When price moves in such a way, creating order blocks, movements away, and you're expecting the moves inside of here to go higher, right, after we mitigate these areas. What we forget to notice is, okay, so let's say we come in, right, we create some equal highs, we come in, we get in on a very small order block or a refined order block, whatever you want to call it, right, and we start getting this move away. let's say we entered right here, right? With our stop loss right under this low, right? With our take profit where? Up here, right? This on its own, if you really want to consider it, is equivalent to about, you know, oh, excuse that. This is ultimately equivalent to about, I don't know, 1 to 6, 1 to 8. I don't even know. It doesn't really matter. The idea is this trade on its own right here, right, is about 1 to 8, right? And a lot of you, when you enter something like this, expect prices to make their way through these highs, right? So you can take profit above here and you can be happy with your 1 to 10, 1 to 20 with your huge RR trades. What we forget to recognize though, is that when we are trading smart money and we are using the footprints of smart money to get involved in the market, a movement can complete before your actual target is met. And what I mean by that is consider if this market does not want to go higher, where would it want to stop? Well, above these highs, or within an order block in here, or within an imbalance in here. So where would it make sense to partial or break even? Well, above these areas here, rather than here. And again, think about this. This makes it about a 1 to, I believe, a 4 trade, aka if you take off half of your position, you will be taking off 2% if you're risking 1%. Okay? Here's the thing that a lot of people don't recognize. Emotionally, a lot of you do not have or do not yet have a $100,000 account with leverage that makes your account technically worth about $10 million, right? If you're with a prop firm or something. If you're not, and you're trading your own money, you're most often likely than not trading a $20 account, a $100 account, a $500 account, and some of you are trading $1,000 accounts, some of you even $10,000 accounts, right? But the thing is, when you risk your 1%, your 2%, your 0.5%, whatever your percentage risk is, when you risk that, it's very hard to walk away with a 2% or a 1% gain because in your mind, it doesn't seem like enough, right? You as a Forex trader and being an institutional trader and now knowing how high RRs you can get, especially with stuff like WWA, with not so much with ICT, but with a lot of stuff out there, the higher Rs you can get, a lot of you expect to get that higher R and get that, you know, that bucks super quick out of your trades without recognizing that your move and your analysis was actually correct. And the only reason it might have failed and did fail is because you didn't partial out of your trade properly. So the reason I bring this up is because when I sent this trade out, we were expecting prices to make their way all the way up here, about 50 pips on that, 50 pips on this, right? With very small risk. But despite that, we still expect to take partials here. Why? Well, think about what's happening here. There's a ton of liquidity resting above these areas, a ton of liquidity resting above this trend line, right? And additionally, there's a potential distribution in here that has not been tested yet. So if that's true, there's an order block in here that took out this liquidity right here that has not been tested. So there is a chance that price actually ends up stopping here, right? Maybe makes its markup all the way up to here and then drops off. Now, what's interesting is this movement here would be a loss for a lot of you trading smart money as you got involved in this trade here, right? But in my eyes, a movement like this and then a drop off would be a major win in our books. Why is this important? Because when you don't know how to partial or you don't partial out of your trade, you are foregoing actual money that you should be making or the trade that you should be correct about because you're not recognizing that the trade does not have to play out to these high areas. The trade can just as easily play out to this distribution, take off downwards, take out the liquidity here, fill in an order block below, and then continue to these higher areas, right? So what we do is we recognize that and partial at areas that make sense, okay? And just because you don't have a account that has $100,000 on it or you can't risk $2,000, $1,000, $500 a trade does not mean that you should not be partialing, right? The thing is, the reason a lot of us are some of the luckiest people in the world right now is being able to learn this is a lot of people think we're unlucky because, you know, this place is now saturated with, you know, algorithms and smart money and we're all getting stopped out. But guess what? People have been stopped out forever, right? Even people trading trend lines when they used to work were stopped out, okay? It all happened. And you want to know the ones that were successful? The ones that partialed properly, the ones that had proper risk management. That's what this is mainly about. So when we sent this out, the reality is the trade on its own was actually a 1 to 3. And if 50% of that is taken off, it was actually, if you want to think about it this way, a 1 to 1.5. But both of them were, okay? So this lock-in on its own is about 3% on your account. Now that is about half of what the S&P on a geometric average return, which means not even every year, will make you if you continue to invest in it. So consider for a second how much money you're actually making if you're risking on a bigger account. which you're not doing right now. But the beautiful thing is when you learn to do this, and then you get funded with a prop firm, or you have the real money, which you can do within a month, within 2 months, then you can start to employ a real trading strategy and model to your trading. And that's what we basically do and teach and understand in our community. Now, that said, we ended up catching this trade off of that spring, that test, and we had the markup. Now, as we had this markup, I'm going to show you right here. As we had that markup, we had trailing stops. We had a trailing stop here, a trailing stop here, a trailing stop here, and then a trailing stop here, a trailing stop here, until we completed this move right here, where we expect to complete it, where we did get a new distribution and that fall off, at which point we were trailing here, trailing here, trailing here, and then we trailed all the way down. I didn't catch this one right here. Some people in my group ended up catching it, I believe. But the point is, our expectations allowed us to partial out early and make 1 to 10, 1 to 20 risk-free without any problem. And the interesting thing is, even if you missed all these moves in here off of all this confluence, off of literally about 7, 8 schematics, you had another schematic unfold here that you could have been interested in buying in. We did not. But the point is, I'm showing you again how these concepts work. These were the trades we sent out and we analyzed and marked up. This was the trade that we did not, but we noticed after like I woke up the next day. But again, you have tons of opportunities to enter. Once we got here, again, I myself was not able to be a participant in this. A lot of people were because they took it up here. I wanted to wait for more confluence and see a test of this area here. I didn't get that. It's unfortunate, but that is how trading is going to be. And that did not bother me because I already understood and already made, what is this? Like literally about 1 to 20 or technically on the entire week. So that's NZD USD. Let's go through some of the others. Let's kind of wrap this video up as it's been a while. But here's Euro Australian dollar. Again, we saw this distribution forming. We get a lot more in depth on the schematics and stuff in this mentorship. But right now, I'm just going to show you guys. Had this creep down. We're expecting for it to come lower, but we didn't get that. But we had the break. So we were expecting for this retest here and this continuation higher. Okay. As we got that, notice what happened again. Now, I believe this did not actually end up coming up here. Instead, I believe this did actually end up from around these areas, coming down and filling in more of this imbalance and hitting these areas and actually coming much lower. But notice what happened. As this trade played out, we sent out partials at this area here. Why? Why do we send out partials here? Well, for 2 reasons. One, we had these order blocks here that we were targeting. We had another suspicion that there was a chance that this UTAD could have held or that equal highs could have been generated in this area. Then much lower prices were generated before coming to take those out. That's why we partialed. Now again, this partial looks tiny in reference to what we wanted to target, okay? But what's interesting is this trade would have been considered a loss for a lot of people trading smart money, right? Whereas for us, it was considered a huge win. This is a 1 to about 1, 2, 3, 4, 5.5, maybe 5, I don't know. 1 to 5 RR trade with partials. If this continued, we would have caught 1 to 15, 1 to 16, 1 to 20, and that would have been great. But we don't need to do that to be successful in this market and to make money, okay? That's exactly actually what happened on gold. We sent out this gold trade right here, right before it happened, or this analysis and this consideration that we made. Any money you make is not my fault, by the way, or lose. We had these highs form. We were looking at this as a re-accumulation, and I wanted to see a move up through the highs, right? Creating that order block, this slow move down that taps into here and then continues higher, right? Expecting for price to come where? Into these areas, testing more of the distribution up here. So what happened? Well, we sent out this right here after. We came, made that high, slowly moved down into this area, moved from there, right? Creating that spring within a spring, looking for another entry, right? In this area here, we were trying to pyramid entries in to get higher. And notice what happened. Here you have it. As it started marking up, we began to trail our profits. Now, guess what? For any other smart money trader that was targeting those highs and just holding, this would have been a huge loss. For us, what was this? This was a win of 1 to 1.5, and this was a win about 1 to 1.5. So the reality of this is it was a win of 3 RR, and if you mitigated either your whole position at trail profit or took off half your position here and then let the rest run a break even, you could have made 1.5% or 3% based on what your risk parameters are for your own trading. This is why partials are one of the most important things when it comes to trading. Or you have a full system that you understand and you want to hold, but you know when you're going to break even. And that's exactly what happened with one of our community members, Owen, right? He sent out this Euro NZD before it happened, seeing this UTAD occur. This was on a 1-minute chart, so this was like just seconds into falling down. But this is what he sent out, targeting what? The spring is in here, right? So this was a spring. He was targeting this reaccumulation down here. And notice what happened. Price came down, came up, gave you another reaccumulation, gave you an area to get in, right? Gave you, actually didn't give you another reaccumulation, but it gave you 1 right here, 2 right here, opportunities to get into this market. Actually 3 after it broke down here and tested this order block. That was 3 opportunities. But again, this was a 1 to 13 trade that played out perfectly. Now, I myself would not have held it fully like he did. And congrats to him for holding it. And it was beautiful. It was an absolutely beautiful trade with a beautiful markup. However, because he had a certain risk parameter for his trade and he knew what he was looking for and knew how to hold it, especially since he moved to break even after about this break right here through these equal lows, understanding the structure should usually hold, which it did, and he was able to receive a perfect trade on that. So the point of this video is twofold, okay? One, it's for a lot of you to understand that smart money trading or institutional order flow does not mean you need to be catching 1 to 10, 1 to 20, 1 to 50, 1 to 100. All it means is that you understand where to find the footprints of the market, how to get involved in the market, and understand the reason behind why you're entering in certain areas, okay? That is one of the biggest things that a lot of people in this market are lacking. When you look at a currency and you look to enter off of something, you understand the reason for your entries rather than, you know, here's my resistance, I hope this works out, right? Here's my head and shoulders, I hope it works out. Oh, yeah, it did. And also that you need to recognize that since you are trading the footprint of smart money, when smart money gets involved, they don't have to take price to your end goal. They can meet another inefficiency that you might have not seen before moving in their desired direction, right? So back to this for a second. A movement that you get involved in. Here's your equal lows. Here's your move through the lows. Here's your continuation upwards. Here's your entry off the last bit of order block here, right? So actually, let's do this. Here's your equal lows. Here's your move down. Here's your take off, right? Here's your move down into that order block, right? Here's your move down into that order block. Here's your potential reaccumulation or accumulation, right? Here's your entry, or here's your entry based on if you will like a higher time frame entry or you want to wait for that lower time frame entry. And as you get involved on this, right, and you start seeing prices take off, you should be either trailing your stop loss, you should be either partialing at areas that make sense, right? Because what can happen is instead of targeting the order block here or the highs here, price could just target these highs and then take off downwards. And guess what? For some smart money, this is a lost position, but for you, it can be a complete, it can be a 10% gain or a 5% gain on your account within this, however much time this takes. If it's a 1 minute trade, 1 minute chart, you can make a ton of percentage on this. Okay. So again, why is this important? Because not every move has to be perfect. Not every move will be perfect. Your analysis is not going to be perfect. My analysis is not perfect. I lose trades, but I also win. And I win a lot more than I lose. Why? Because I understand which areas need to be partialed out properly. So the thing is, the reason a lot of people also get kind of confused by this is because when they come from retail trading and they're used to their 1-to-1s, 1-to-2s, they're like, well, I need to catch higher than that. But the thing is, when you're catching a 1-to-1 or a 1-to-2 in smart money, you're not just catching that as your entire trade. That's the thing you have to differentiate yourself from. What you're doing is you're catching that as a partial, or maybe it's higher than that, right? The RR doesn't matter. You're catching that as a partial, and then you're potentially, with risk-free, looking to make 1-to-20, 1-to-30, 1-to-50, 1-to-100, or much higher. Now, why is that a big deal? Because the fact that you understand how to partial, or you're ingraining that in your system, is going to be the essence of your psychological approach to the market, and why, and what's going to differentiate you from a successful smart money trader to someone who's unsuccessful. Instead of catching that order block and looking for those super highs to be met, understand which highs could be met as liquidity before moves away happen. Understand which inefficiencies could be met before potential redistribution and moves down, right? Even this occurring should still be considered a win for you if you were to catch the accumulation in here. Because guess what? As this occurs, you start realizing certain things about price, and you either get stopped at break even or you trail, right? Getting stopped at literally about 1-to-10. If you looked at this right here, this is about 1-to-1, 2, 3, 4, maybe 1-to-5, something like that. But the thing about this is that you are making money on a move that looks like a loss. If I sent this gold trade, which we did, right? And we sent it out, we looked at the analysis. If I sent this gold trade like this and showed you guys this right now without this trail profit right here, what does this look like to you? This looks like some time in heaven, and then it looks like our trade went to shit. But in reality, what this trade ended up doing was giving us exactly what we wanted, because we recognized that if this was a redistribution and not an accumulation, then prices are going to take off from these areas and then come lower to take out what? The liquidity below these equal lows, this trend line, and these lows right here, or this longer term trend line right here, as you can see, right? Here's your move down, here's your test, and then here's your liquidity grab, right? Okay, so I hope this made a lot of sense. This is basically how you catch refined entries, how you mitigate them properly, and why you might not be making money and smart money the way you want to be. The most important thing you need to remember is to partial, understand why you're partialing, understand why you're entering, and potentially join a group where people are like-minded, are dedicated to doing something that you're trying to do, and are here to help you talk through it, to support you, and have access to me. So thank you so much for watching, guys. Of course, if you join, just so you know, you have access to all this right here. You have course content that isn't all available on YouTube. You have webinar recordings, which we have every week, and you have a ton of text channels and people that you can use to for your benefit and for your growth, and of course for mine and for others, because we all learn from each other. So thank you so much for watching. Please leave a like if you enjoyed it. Leave a dislike if you didn't, but let me know why. I'll see you guys in the next one. Thank you so much for being part of this movement, and have a great trading week.